Hello guys, it's been a while. Do you miss me? Maybe not. Why would you miss me? It's been so long since I made a video, I even forgot how to do it. I have been working hard and traveling hard. I went to the Southern Highlands recently. Do check out my other channel, links in the video description below, to get a glimpse of country living in New South Wales. Anyway, I wanted to share with you the investing activities which I have done recently. Well, this week I finally sold my CBA stocks. For those watching from overseas, CBA is the biggest bank in Australia, and I used to work for them for a bit. They have the best computer system. It is the most modern amongst all Australian banks, and even their back-end systems are relatively modern. I had some CBA stocks since 2017 in my superannuation retirement account. I bought more in March last year during the pandemic crash. I didn't buy at the very bottom, but it wasn't too bad. And then the stock price dropped more after I bought. And now I'm so happy that I finally get to sell not only the stocks I bought last year, but also the ones in 2017. I've been waiting like forever. I made around 20% of the stocks I bought last year, but only around 8% of the stocks I bought 4 years ago. That's kinda bad, but who cares? On Comsec, I saw that Goldman Sachs recommended a sell on CBA and a buy on ANZ. So I thought, okay, let's just get rid of it. By the way, you probably do not want to listen to me too much. I have some general idea of what to do with money, but I don't pay much attention to it. Yesterday was literally the first time I looked at the stock market in more than a month. I don't think I even know what's going on. Peter Lynch said that you have to look at 20 companies to find one good company. I'm honestly too lazy and too busy to look at 20 companies. I have actually lost a lot of money from the stock market. Let me show you my Interactive Brokers account. Almost everything there is in negative. Part of the reason is that I tend to keep my losing positions and hope that one day in the distant future, they would recover. So a lot of the positions that you see on the screen are those that I have held for several years. But anyway, my long-term average return since I started investing 15 years ago is only around 5%. It's not that good. In fact, it's not good at all. By the way, if you are a serious investor putting in a sizable amount into the stock market, check out my referral code for Interactive Brokers in the link on YouTube. You can get up to $1,000 worth of value, and I get up to $200 worth of referral fee. You essentially get 1% for every $1 that you deposit with them. So if you want to get $1,000, you're going to have to put in $100,000. But you only need to maintain a balance of $10,000 for at least a year for me to get a referral fee. So I will still be deeply thankful to you, even if you do not have $100,000. Anyway, going back to my Interactive Brokers account, I bought Berkshire only around 4 months ago, and it is already up 11%. And I'm going to sell it soon. I'm not selling because I'm afraid it will go down. If anything, Berkshire is one of the better stocks to hold during a market crash. I'm selling because I'm going to buy a house and I need the cash for the deposit. It has been my dream of several years to buy a house, a freestanding house. I've had a couple of apartments, but apartments are easy to buy. They're good to start with as a first home buyer and second home buyer as well, but by the time you want to get your third one, you probably want to try to buy a house. A few days ago, I saw this video from Heiser Says. He is a YouTuber that reads a lot of news. Apparently, heaps of people are now camping for 1 or 2 days just to buy a block of land in Sydney Southwest. Camping a couple of days to buy a block of land. I was like, what the hell? I know people camp out to buy the latest Apple iPhone, But that was a few years ago, and now people do not do that anymore. Now they come to buy a block of land. I actually feel a little bit stupid right now. Last year I sold my apartment in the Northern Beaches in New South Wales. I was hoping to buy back a little bit lower this year, but things didn't turn out how I was expecting them to be. There's no coronavirus crash. In fact, the Northern Beaches is one of the few areas where even apartment prices have started to go up again. In most areas in Sydney, apartment prices are still down. Only the freestanding houses are up. The reason is people need a bigger space to work from home, and they are also afraid of the virus in the lifts and the walkways. Another reason is that building value generally goes down over time as it gets older and the building starts to look like a dungeon, but land value tends to go up over the long term because there's only a limited amount of land near the offices, shopping center, and the infrastructure, hospitals, schools, and so on and so forth. I'm going to use ANZ Bank for the mortgage because they can lend me 90% of the property value without paying for lender's mortgage insurance. If you are an accountant, CA, CPA, or even CFA, you can take advantage of this benefit, whether it be for your personal home or for your investment property. The same goes for if you are a lawyer, and if you are a doctor, you can even borrow 95% of the property value without lender's mortgage insurance. By the way, I'm a mortgage broker, so please feel free to contact me if you want to learn more about your low deposit home loan options. Why am I buying a house? A few reasons as follows. Number one, there are talks of responsible lending rules being removed next month. This should make it easier for Australians to borrow more to buy a home, and this will push up house prices. Reason number two, stamp duty may be removed in July. I'm not sure how this will impact house prices. I think the cheaper houses will go up more because the people who buy the cheaper houses often cannot save a lot of money very quickly, and the removal of stamp duty will really help them a lot and enable them to buy a home when they cannot do that now. And hence the house prices will go up due to demand exceeding supply. But the removal of stamp duty probably will not impact the expensive homes too much, because the people who buy expensive homes probably have enough cash to pay for the deposit and stamp duty anyway, and paying stamp duty is actually going to be cheaper over the long term compared to paying the higher land tax that they are proposing over a number of years. I think it's like 5 years or 10 years. I couldn't be bothered putting up the figure for the new land tax, but I'm pretty sure if you hold the property for 10 years, you'll end up paying more if you choose the higher land tax option. As far as I know, you will still have a choice. You can still choose to pay stamp duty even after July. So if you have the money for the stamp duty, you don't have to worry. There's no rush for you to buy something right now before July. You can still choose stamp duty if you wanted to after July. Now, reason number three is that there are talks of property prices going up 10% or 20% over the next 1, 2, or 3 years. So yeah, I think it's better for me to get back into the market. If I buy with 10% deposit and let's say the stamp duty is around 5%, that's a 15% contribution altogether. Every 1% appreciation in the property value will give me over 6% return on equity that I put in. If I rent it out, my rental income should more or less cover my mortgage interest charges. This is why people in the Sydney Southwest camp out for a couple of days to buy a block of land. Good things tend to come with great sacrifices. Reason number 4 is that interest rates are at all-time lows and borrowing power is at all-time highs. If I wait until interest rates go back to 7%, I don't think I can buy the house I can buy right now. My borrowing capacity will be shit. The price of the house will drop maybe 30%, but my borrowing capacity will drop maybe 50%. I'm making up the numbers here, but I'm pretty sure my borrowing capacity will drop more than the price of the house. So I better buy now. and ride out the cycle and just make sure I do not need to sell when the property price goes down by 30%. It will eventually slowly go back up. I want to make sure I have enough cash, maybe for the next 6 months or 12 months of mortgage repayments, just in case. Reason number 5. In Sydney, the tenant eviction moratorium is not as bad as in America. As a landlord, as long as I have entered into a price negotiation in good faith, I can evict my tenants who are not paying the rent. The tenants cannot freeload on me for 1 year or 2 years like they can in America.
It's a bit silly over there.
Reason number 6. Property is a lazy person's game to become wealthy. You do not need to be smart and you do not need to get lucky for the most part. You don't need to spend a lot of time doing a lot of research. Remember, Peter Lynch said that you need to look at 20 companies to find one good one to invest in. By the same token, you also need to look at 20 properties to buy one property. But it takes maybe 30 minutes or 60 minutes to inspect one property. Multiply 60 minutes by 20 properties, you spend a total of 20 hours, and you get to buy one large investment, maybe $1 million or at least $500,000 if you are in Sydney. And this is 20 hours worth of driving around and walking around. Everybody can drive and walk around. If you buy stocks, you spend at least a whole day reading articles and financial reports to have any meaningful understanding of a particular company. So you spend 20 days to research 20 companies. And then you probably only invest $10,000 or $100,000 into the stock. So you do all this research and spend all this time only to spend $10,000 or $100,000. Stocks take a lot of time to research carefully. You will see that fund managers actually spend more than 1 day to research one particular company. They actually spend a few weeks to research one particular company. So for them to research 20 companies, they actually spend maybe a whole year. Yes, it is true that you can make a lot of money investing into index ETF, but still the prospect of turning a 1% property appreciation into a 6% cash on cash return and the supersized investment of 500 grand to $1 million in a single hit is just too attractive for me. I cannot leverage to this extreme degree with index ETF. It will be too risky and I will most likely go broke within a decade. Alright guys, that will do me for today. Remember to smash the like button and subscribe to my channel if you like this sort of content. And please do contact me if you need a home loan or an investment property loan. I get commission if you get a home loan through me, and it will help out this channel a lot. And do use my Interactive Brokers referral link, please, if you want to invest seriously. You need to maintain a balance of $10,000 for at least a year for me to get a referral fee, and I will be truly thankful to you forever.